Welcome to this week's roundup of key business developments in Sri Lanka. I'm Nishani Pigera, and here are the top stories making headlines this week. Sri Lanka confident in beating debt ceiling targets. $2 billion FDI target for 2025. Tourist arrivals off to a strong start. In our top story this week, Sri Lanka's Finance Ministry has expressed confidence in reducing its debt-to-GDP ratio well below the 95% target set by the IMF by 2032. The ministry, citing strong GDP and currency performance, noted that the debt-to-GDP ratio has already fallen below IMF projections, driven by successful debt restructuring efforts. Negotiations with bondholders, which concluded in December, resulted in a 16% nominal haircut and a 33% net present value haircut. The ministry also highlighted a foreign exchange debt service cap of 4.5% of GDP, thus ensuring sustainable debt management. According to Dr. Nandalal Veerasinghe, Governor of the Central Bank, Sri Lanka's GDP is expected to have expanded by 5% in 2024, marking the highest growth since 2017. In the third quarter of 2024, alone, GDP growth reached 5.5% from a year earlier from a deflationary environment, low interest rates and policy measures by the government. Meanwhile, Sri Lanka's foreign reserves fell to $6.1 billion in December, down $360 million from a month earlier. This drop is due to servicing debt repayments towards the end of the year. By the end of 2025, the central bank expects foreign reserves to reach $7 billion. According to Anil Jayantha, Deputy Minister of Economic Development, Sri Lanka is expecting to attract over $879 million in 2025 from local investors based on government incentives and an improved business environment. In addition to this, he expressed expectations to attract FDIs of at least $2 billion annually, placing a higher priority on new technology. In 2024, Sri Lanka was only able to attract 74 projects totaling $608 million. The Economic Transformation Act passed earlier in 2024 is also expected to help improve the investor climate, while the port city alone has already approved 22 businesses of strategic importance. Next week, President Anukumara Dissanayake will undertake a 3-day visit to China. He will be accompanied by Vijitha Herath, the Foreign Minister, and Vimal Ratnayake, Minister of Transport. The visit comes following the formal acceptance of the One China policy by the Cabinet. China has been an FDI and tourism partner, having invested in projects such as the Port City and Hambantota Port. The all-share price index at the Colombo Stock Exchange saw some profit-taking this week after a 26-day-long rally, although holding close to the 16,000 mark. The bourse is now moving along the psychological 16,000 index mark. The banking sector is driving the momentum based on re-ratings by broker firms from possible impairment reversals following the completion of the external debt restructuring. On Wednesday, turnover was a significant 8.6 billion rupees, lower than the recent weekly average of 10 billion. In 2024, the Port of Colombo reached a historical milestone of handling 7.7 million 20-foot equivalents compared to 6.9 million in 2023. With the current capacity, the port terminal is able to handle ships exceeding 400 meters in length and carrying more than 23,000 TEUs. The completion of the East Container Terminal, expected in 2025, will double the port's capacity to 15 million TEUs annually. In addition to this, the CICT Terminal, a joint venture with China Merchant Holdings, handled 3.3 million TEUs, while the SAGT Terminal, owned by John Keells, handled 2 million. Elon Musk's Starlink satellite communication service has received tariff approvals from the Telecommunications Regulatory Commissions for its satellite broadband packages. There are a total of 5 packages ranging from residential fixed to mobile priority packages. Under this, tax-inclusive packages start from 9,200 rupees and goes up to 1.85 million rupees per month. In this week's tourism update, Sri Lanka in the first 7 days of January welcomed over 39,000 visitors. Daily arrivals saw a slight decrease, falling to 7,883, down from 8,037 in December. Russia was the largest source market during the month, followed by India and the United Kingdom. According to Upali Ratnayake, SRTDA chairman, in 2024, Sri Lanka is projected to have earned $3 billion in tourism earnings. At the Treasury bill auction held on Wednesday, yields on all maturities fell for the fifth consecutive week. Bids amounting to 292 billion rupees were received, of which 102 billion were accepted. The Sri Lankan rupee depreciated against the dollar this week, with the central bank's indicative mid-spot rate ranging between 293 and 297 rupees. That concludes our update for the week. For the latest on economic and business developments in Sri Lanka, do subscribe to our YouTube channel below. We'll be back next week with more insights. Thank you for tuning in. Stay safe.